This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Finally, it's a Friday. Finally, it's the last trading session for 2023. But we are, as always, coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Reema. Guys, hi. Good morning.
Good morning,
Hi,
guys.
good morning. Final day of the week, the month and the year for trading.
Do you guys get nostalgic? I do. Just thinking the year's gone by and it's been a good one and all of that. I'm already in nostalgic mood. Just putting out an FYI.
So that means that you actually reminisce and you think about what's happened during 2023?
But it's been a big year for you,
But
right?
it's been a good year, so I'm not complaining.
What happened last week? Anyway, it's actually been a good year to look back at, right? You just have to, from a financial point of view, you just have to look at the portfolios. I'm assuming that for all of you, for all our viewers, it's been a fantastic year. Markets have done so well, so no reason why you should have done any worse as well. We'll get to that in just a bit, but let's just address the here and now in terms of how the market is looking, because the rally has been non-stop. This week, for example, the Nifty is up 2%, another 2%, I should say, rather. And this, of course, after the previous week when on that Wednesday the market sold off pretty sharply. So that's the backdrop. Now, U.S. markets had a quiet session overnight. The S&P 500 was absolutely flattish. Nasdaq was down about 0.03% or so. So nothing at all from U.S. indices to take off. I mean, we would have liked that the last day the S&P hits a new record, and that's behind us, that's in the bag. But we'll have to, I guess, wait for U.S. by the of course has two more sessions to go before they call it a day. You get the 10-year yield, which actually went up about 5 basis points. So the 10-year is back at about 3.84, but the far cry from the 5% levels in October, right? So there was an auction. The U.S. Treasury, the U.S. government sold about $40 billion of 7-year notes, and there was pretty poor demand for that, and that's the reason why yields went up. By the way, January in the U.S., it's going to be a pretty heavy month in terms of Treasury supply, government raising money by selling bonds. So we'll see how that goes. I think about $200 billion in the month of January, almost $200 billion. A dollar index that went up a little bit, about 0.25% or so. We are back above the 101 levels. Oil prices, they were down 1.6%, and we are just over the $77 per barrel mark. I mean, basically it's been 76, 77 to about 80, 81, but no real indication of where things want to go in a definite kind of way. Now, just to circle back to the market here, we've been working with extension of the Fibonacci retracement levels, and the next targets for the Nifty are 21,830. We're almost there. So then, we're introducing one more, which is actually, the 161.8% retracement is not 22,000, is pretty close by. So I just rounded it off. So, logically, the 22,000 level is the next kind of number which the Nifty will sort of look to scale. There's a technical significance there as well, as I said. And on the downside, the 40 hourly exponential is around the 21,500. So I guess that could be used as a bit of a trailing stop. But with these big moves that we've seen every day, the distance increases between where the market left off the previous day and where it leaves off the next day. So supports kind of fall behind, but that's the one that is important. On the Nifty Bank, similar technical levels, 49,175 and 49,600 are the levels for the Nifty Bank to look up to. And, one could use the 48,000 level as a support, as a trailing support on the downside. That's, very, very close by, about a 1% on downside from where we are. Now, markets have done very well. I just want to leave off with one point. Because we're wrapping up December, we're wrapping up 2023, and we're looking into January. If you are trading, and only if you are trading, and you're trading long and you're enjoying this momentum, etc., especially if you're enjoying this momentum, remember the January seasonality effect. 12 out of 16 years, January has delivered a negative sort of return. The 4 years when January was positive was because, the previous year or the last couple of months, that is November and December, coming into those Januaries was very poor, was very bad. So remember that. And this has, of course, been an exceptional year, 2023. The Nifty, the mid-cap index, for example, is up 5% this month, in the month of December. So remember that, especially if you're trading and have been enjoying the momentum. I think one needs to be mindful that maybe there is a bit of a break coming. It's possible that this is this is another positive January, but I think it's important to be mindful that seasonality is not in your favor. And of course, just want to wrap up with 2023. Nifty 20, small cap 55, mid cap 45, Nifty Bank only 13, and that's the reason why there is so much consensus bullishness now that banks are the next place to be, which offer comfort, etc. But I think there should be nothing but gratitude for the big returns we've seen in 2023. I don't think anybody saw it coming, especially with what's happened with mid caps and small caps. Guys?
Just to add to that point about January seasonality, the last 5 Januaries, markets have given you a negative return. In January of 2023, the Nifty sensex was down 2.3%. The January before that, it was flat, but minus 0.1%. Before that, minus 2.5%, minus 1.7%, minus 0.3%. So the last 5 Januaries have been negative. If you want to go back to a positive January, you have to go back to January of 2018.
It's like the hangover after the party, right? That's what Jan ends up being. I guess that's what data that you guys are talking about. That's what it is throwing up. Speaking of, data, I guess the biggest surprise of 2023 as the year winds up is this rise both in FII participation, the net buying that's come in, and volumes. And I just want to put yesterday's number up on the board. 4,359 thereabouts. I mean, that is what we got yesterday. Remember, the day before, the number was almost 3,000 crores. Yesterday, we were talking 4,300 crores. And these are surprisingly high numbers for the end of the year. And they're backed by a rise in cash market volumes. Yesterday's turnover was higher than the previous session as well. And we did about 1,25,000 crores. Nothing to sort of ignore or take lightly there. Those are very decent volume numbers that we've got going. Of course, we've been asking guests about this as well. And, one thought process is that a lot of this is ETF buying. And, the program trades that are playing out with India perhaps getting a fair share of allocation as NAVs are managed, as, final portfolios are managed before the 31st of December. Perhaps that explains the kind of sudden gush of liquidity that we've got at the end of the year. But anyway, I'm sure people are not complaining. Bulls are quite happy with that. Another positive cue, by the way, in terms of the last 24-hour action is the fall in oil prices. Brent was down almost 3% overnight. And this is because of, 2 factors. One, of course, that there is easing tension around the Suez. Maersk has been talking about getting more and more of their ships to go through the Red Sea passage. So are some of the other shipping lines in Europe. So that's working out well. And by the way, the buildup in U.S. crude stockpiles, or rather the drawdown, I should say, was far greater than anticipated. The drawdown was over 7 million barrels. The expected fall was less than 3 million barrels. So there's a lot of oil consumption in the U.S. market. So basic demand supply plus easing of all the concern in the Suez, that seems to be helping. And oil was down. We're down to about 77 now on Brent. So that's another positive cue for today. But guys, I don't know. The hope would be that we end with that little bit of a green tinge as it has been such a great year. But then who knows? We've had a great week as well. So maybe some profit booking sets in. I just want to end with the tally of the year. The U.S. market itself, let's start with the mothership. Dow's up about 14%. S&P 500 has a fantastic year, 25% up on the S&P 500. The Nasdaq has been the big winner. We know that. The Magnificent Seven, as they're called, these big tech giants. That index is up 45%. I didn't put the Russell 2000. The Russell 2000 is up around just about, in the late teens. So the real small cap rally in the U.S. is yet to play fully catch up. India, Prashant has mentioned the stats already. Nifty up 20%, mid cap 45, small cap 54%. That's the performance on the small cap. Global markets, and this is an interesting one. Japan has been the outlier this year. Again, not many would have thought that the Japanese market, the Nikkei, is going to give you 30%. That's just the headline index in Japan. The Kospi is not too bad. It's kind of in sync with us, about 20% on the South Korean market. And China, and I'd kind of end with that question. I think a lot of people, when we come back in January, will also raise that same question. Remember, we keep talking about this, whether it's sell India, buy China, or sell China, or rotate back in India. We've had various phases of these trades play out in 2023, and we'll see what 2024 has in store.
Oh, absolutely. But for our own markets, today I think it's going to be a quietish start. That's what Asian markets are suggesting. We've had 2 good days on the trot where the markets have, closed at record high levels. So the bull run continues for our own market. The new levels in terms of highs on the Nifty, it's 21,801. On the sensex, it's 72,484. On the point about FI flows picking up, as Surbhi pointed out yesterday, 4,300 crore plus in terms of the cash market. This is over and above the near 3,000 crore of inflows that we had from the FIs yesterday. And in terms of gross purchases, today the FI's gross purchase number was close to about 13,500 crore, higher than the 10,500 crore of gross purchases that we had in the prior day. Cash volumes, is 35% higher compared to Wednesday and 65% higher compared to the average daily trading this year. So yesterday was a bumper day in terms of cash volumes. And just getting back to the point about January seasonality, markets have declined in January for the last 5 years. It's typically a seasonally weak month, and that's the stats will come up for you in terms of the declines that we've seen in the last 5 years in the month of January. But let's get you some money market views then to take the show forward. On the rupee, Lakshmanan V of Federal Bank says the increased likelihood of rate cuts by the US Federal Reserve has led to the dollar index struggling. Thus, all G7 currencies are trading at multi-month highs against the US dollar. The dollar's decline, combined with strong FI inflows, has been the primary reason behind the rupee's recent gains. He expects the rupee to trade in a range of 82.9 to 83.38 against the dollar in the upcoming trading session.
Lakshmanan V says that government bond yields inched marginally higher while the overall trading volume remained shallow heading into the end of the year. The minutes of NPC's latest meeting failed to provide any major directional triggers to markets. US yields have remained below 4% as markets factor in a higher probability of rate cut for Fed in March. In coming sessions, he expects the 10-year to trade between 7.1 to 7.25%.
Okay, well, lots of stocks that we will talk about today as well. So let's run you through the list of possible movers and shakers, which we'll discuss in our top 10 segment. Today we're looking at PNB, Wari Renewable Tech, Swan Energy, India Shelter Finance, Saturn Credit, RBL Bank, Federal Bank, IndusInd Bank and IDFC First on the back of positive news flow. Bank of Baroda is the only stock on the radar that could open in the red because of that massive increase in the interest rates they're paying on deposits. More on that in just a bit.